Equity investments. Today we focus on equity investments and we'll also work on the valuation part. Now, basically, equity investments, we will be covering in this models of how to value shares. Okay, that's called DCF models. Yeah, last we discussed discounting cash flow models. Basically, you learn how to estimate the free cash flows and then you value by using discounting techniques. We'll cover that. Comparable, how to compare the values to other companies. So these are methods of valuing companies, okay, for shares. Free cash flow method, market equity, which is price earnings, price to book value. LBO method, LBO models, which is leverage buyouts. And we'll also look at valuation, other push value got 100. It could be that the value could be 150 or 70, 80. So we look at various scenarios and do a sensitivity to see आगे पीछे कितना हो सकता है. And then we take an average of the. So this is a very important thing called sensitivity and scenario to find out the impact of small changes on the value and to find out the resultant average basically. Okay. Now, why is equity investment such a big part of our syllabus and our financial modeling? It's very important to actually understand the equity investment is required for all investment banking transactions. So, जो भी bank in the investment banking world, they rely on valuations. Merger and acquisitions, they rely only on valuation, right? The companies will take over another company. So M&A, IB, in these two equity investments, you look at Morgan Stanley, JP Morgan, BlackRock, BofA, all of them want people who know and understand equity valuation. So please learn this topic really well. In any interview, they always ask you, what's your understanding of equity investment? Critical topic, okay? It's used for IB companies for raising funds, IPO, FPOs for the private placements, anchor investments. It used a lot for merger and advisory, transaction, consulting, and obviously valuation is useful for even you if you're buying shares of a company. Okay, advise people. So these three are the main chunks of valuation in any investment banking firm. Clear the concept? So logic बैठ गया कि हम लोग equity कहाँ use करते हैं? Okay, investment banking, basically capital markets, placements, merger and acquisitions, and in valuation for investment purposes. Okay, you'll have seen. Have any of you ever seen prospectus जो Morgan Stanley issue करते हैं, जिसमें बोलते हैं ये शेयर recommended है buy के लिए. कभी पढ़ा है वो? कोई भी buy recommendation देगा, right? For any share, do they just say buy, target, or do they give a background? कोई report पढ़ा है कभी? It is a 14 to 16 page report जिसमें कभी पूरा background और current future plans वो सब डाल के they will then give you an estimated price and based on the target price they will say this one. So the report क्या मिले हाँ मुझे लगा कि चलो the price might go up, emotional and then therefore go. All those reports that they prepare are based on ground equity valuation and you guys will be working on that part of the research. So when you initially join any investment bank, financial modeling, you will focus on valuations. Is that clear? So this is like the bread and butter of the business if you ever join these firms. Are we clear with that? So please learn this well and try to get the mastery over this topic of equity valuation. Clear?